Hello, everybody, and happy Thursday. My name is Sam Gatlin. I'm an analyst with All Star Charts. I'm also an editor at the Gold Rush. So I want to talk to you today about all things precious metals. Yesterday, we just got fresh monthly candlesticks. So I want to talk to you about some monthly candlesticks that stood out to me. We have the US dollar index, the Dixie, trying to scoop and score. That is front and center for me right now. I want to talk to you about that as well. It is my producer, Mr. Gene Gautier's 35th birthday today. So happy birthday, Gene. Shout out, you are the man. I appreciate all you do to help this show happen each week. And if any of you are watching this on YouTube, feel free to jump into the chat and pop any questions my way. I'd be happy to answer them. We also have links in the description on YouTube to find out more about what we do at the Gold Rush. So if you're interested in what I have to say, don't hesitate to check that out. We put out 2 reports each week. One on Friday for commodities and one on Monday for gold. And we put out bond and currency reports various times throughout the week. It's all great research, and I think you all will be interested in what we have to say there. But for now, let's talk markets. Let's talk about the US dollar index first. If I can get slide number 2, Gene. So here we have the US dollar index. As you can see, it recently broke below a key level of support, which was the lower bound of a multi-year range here. And as you can see, late last year, early this year, price tried to climb out of this range and it failed miserably. And what really tipped it off for us was the speculators, the dumb money, if you will, was betting on a stronger dollar. And that is typically not a great sign if that's a trend you're involved in, especially with these currencies. The dumb money is really great to fade there. Right now, we have the Japanese yen, which is, I believe, about 10% of the US dollar index. The speculators have never in history owned more Japanese yen. So that really stands out from a positioning standpoint. But all of you go look at the euro, the franc, the pound, all of those currencies that are included in this US dollar index. As I mentioned here, when price tried to break out of this range, speculators were super long. And that has all been erased with this massive collapse to the lower bound. And now sentiment in the COT is much more neutral. So I think it's due for a bounce, a little scoop and score here back into the range. And I think that has broad implications, not just for US stocks and growth stocks and crypto and crude oil futures. I also think it matters for precious metals a lot. So we'll talk about that later in the show. Also, here's the iShares 20+ year T-bond ETF. That's the ticker TLT. This is one of the largest, most liquid bond funds. Let's see, I'll pull it up and let's see how many assets under management this has. It has, yeah, about $50 billion. So this is a big, very liquid fund, as I mentioned. And here it is, nearing the apex of a massive range here, a little symmetrical triangle, if you will, you pattern aficionados. And as you can see right here, just a few weeks ago, this bond fund had its worst week in several years. So that could have been an early indication that the bears are about to take control of this chart, which would result in lower bond prices and higher yields. It's anybody's guess if that's the case. I don't know. I think we need to let price confirm what's going to happen here. You know, there's the Federal Reserve. They keep talking about rate cuts potentially. I think the Fed funds futures have about 4 rate cuts priced into the market right now. So I think the market is anticipating lower bond yields and higher bond prices. So I think that's also something to consider. But this is really a mixed bag. It's a range-bound market. There's really not much happening here. But the implications are huge for this T-bond fund. Just like we mentioned here with the US dollar, the implications are very, very big for what the currency markets are going to do. And it's the same story for bonds. This is the largest market in the entire world. The US stock market is about $50 trillion, and this bond market is about $150 trillion. So it's apples to oranges. You can't even talk about stocks without considering what the bond market is doing. So this is very important to consider as context for the broader market. Now let's talk about some of my favorite monthly candlesticks that just came out of the oven last night. So let's start off with the RSPM. This is the S&P 500 equal weight materials sector. And I see Chef Aaron's in the chat saying oil is looking spicy here. We're going to talk about that later, but I think it could be looking spicy for the bears, but we'll see. We'll see. If the dollar is going to scoop and score here, then you're probably right. The crude oil futures have a chance to scoop and score as well. Back to this chart though. This is the equal weight materials sector of the S&P 500. So this has the largest materials companies pretty much in the world. And here it is, finding support at the lower bounds of a multi-year range right at $28. As you can see, the bears tried to break it lower. They failed miserably. And you're going to see this as I show you the rest of these charts. It's a big theme. Key support broken, but it did not hold, and it turned into a pretty epic hammer candlestick. So I think materials could be heading back towards the upper bound of this range. And this fund, I'll pull up the holdings. It has at the top about 4.8% of it is the Mosaic company. And then you have Newmont, Vulcan Materials, Martin Marietta Materials, Corteva, Steel Dynamics. Those are the kinds of stocks that are in this fund. So I think that's a really interesting place to look right now for some mean reversion higher. I also think agribusiness is interesting right now. That's ticker MOO. Moo. That's a great ticker. One of the best in the entire market. No doubt about that. Shout out to Van Eck for making that. That's definitely in the Hall of Fame. But here you have a much, much larger level of interest that we were just talking about, a little multi-year range here. Now this is a multi-decade range in the Moo. So this was resistance in 2010, 2011, resistance again in 2015, and now is this support. This 58 level is the line in the sand, and it kissed it perfectly in the month of April and rallied higher, closing green for the month and printing a pretty textbook hammer candlestick. So I think you want to keep an eye on this one. It has stocks like John Deere at the top, Zoetis, Corteva, Bayer, Nutrien, all kinds of different agribusinesses. I think that's a really interesting one. And then here's small cap materials. So earlier we were looking at the S&P 500 equally weighted materials sector. So those are the large cap materials. Now we're looking at the small caps. And it's a very similar story here. A multi-year range, testing the lower bounds of that range, but holding support with a long lower shadow on that monthly candlestick. So I think the bias is higher here, and I think this could be a good low. We could get a retest, who knows, but I think you want to give the bulls the benefit of the doubt, and this one's probably heading back towards that peak from earlier this year. And this one has stocks like FMC, which is about 8.7% of the fund, and some other stocks that are listed here. So go check that fund out. I think that's a really interesting opportunity right now. It also has a few gold miners, which we'll talk about later. That's included in the materials sector. What also stood out to me was the iShares Global Clean Energy ETF, which is ICLN. This is it's a lot of solar, but it's not just solar. It has stocks like this Vestas Wind Systems, which I believe is, I think it's Danish, some small European country. And anyways, it's like a $90 billion wind stock, and you have this Chinese utility stock at about 4.5% of this fund. Anyways, this has been one of the worst places to be this entire bull cycle. Clean energy stocks have been so terrible. They have just pretty much gone down the entire time. But, that's always an interesting time to think about buying. If everybody is bearish on these stocks, I think you want to lean towards the bull side. It's the market is just a discounting mechanism, and if everybody is discounting lower prices for clean energy stocks, I think the risk with this sector is to the upside. And here you have a very tradable basing pattern here that is shaped up during 2025. Price is currently bumping up against that level that comes in just below $12. And if price can break out of here, I think it could get back to this Q4 peak from last year. It's up about $15. So 12 to 15 is the range we're talking about here. I think it could fill that range pretty quickly because look at this volume pocket that I included on the right-hand side of the chart. Not a lot of shares have been transacted between $12 and $15. I mean, look at this absolute collapse that it suffered late last year. So I think the bulls could step in here and repair some damage in the ICLN. I like keeping an eye on that one. Now let's talk about water stocks. So what we're looking at here is the S&P Global Water ETF. That's ticker CGW. And the top 5 holdings are Xylem, that's ticker XYL, that's about 7.8% of the fund. And you have the American Water Works, ticker AWK, about 7.6% of that. Then you have the Sanitation Company of Sao Paulo, that's ticker SBS. Check out that base. I didn't bring it along with me, but if you zoom out on the SBS, it's a massive base breakout that it has going there. And we've been talking about these Brazilian stocks a lot recently. And it's a whole theme. And what's really driving that theme, to take it back to how we started the show, is the currency markets. The Brazilian real is flirting with new multi-month highs relative to the US dollar. And on our Commodities weekly post that we put out each Friday, we recently talked about soybean oil, which if you overlay that, or you can just overlay soybeans or soybean meal, any of the soybean derivatives really, they all look like the Brazilian real. And the soybean oil just resolved a pretty textbook bearish to bullish reversal pattern. So I think that was kind of an early indication that the Brazilian real was going to make new highs relative to the US dollar. I see Jason's in the chat getting excited about soybeans. I know he loves soybeans. He likes to talk about the large energy companies. They're actually looking for more renewable energy sources. So that includes ethanol, which is a lot of corn, but I think soybeans are also a big part of that. And yeah, I kind of got off topic there, but we were talking about water stocks to start with here. So water is a big theme. A lot of people like to talk about this being just a secular uptrend. The world needs more water. And the chart doesn't really disagree with that. You have a pretty textbook cup and handle pattern here. Looking to break out above 60 in the CGW. It looks sweet. So keep an eye on that. Now let's talk about some of my favorite long-term charts for futures, commodity futures. Here we're looking at feeder cattle futures. So as you can see, this resolved a massive cup and handle pattern, which carved out over the course of about a decade. It recently put the finishing touches on that, and here it is breaking out to new all-time highs. I'm looking at that 161.8 extension level around 333 as the first target for the feeder cattle futures. I think that's really interesting right now. And now on the short side, because the cool thing about the futures market is that it's just as easy to short a commodity contract as it is to buy. That's very, very different than how it is in the stock market. You know, if you want to go out there and short a stock, you can buy the puts, which is great, and you can also short the stock by borrowing shares to short, and you have to pay a fee for that. And sometimes it's if it's a crazy stock, like I was looking at the Webull IPO a few weeks ago, and it was like 350% to short the stock each year. So that's pretty obnoxious. So the stocks are very strange in that way. But commodities, it's so easy to short, and I really like taking a swing from the short side on the sugar futures. They closed yesterday below that 17 and a quarter level. Let's see where they're trading right now. The sugar futures are at 17.17, so you're getting nice follow through on yesterday's breakdown candle. I think this is super actionable right here, right now. We outlined this trade idea on Friday for Gold Rush Premium members, so they got this trade idea first. And our first target is that 1470 level, which is this key pivot low from 2021. I think that could be an interesting place to take profits. But if we get below that, I think you could pretty easily get back towards that 2020 low around $9. So this could be a pretty big trade, potentially. Now, Chef Aaron was in the chat earlier talking about crude oil futures looking pretty spicy. Here's how I see it, Chef Aaron. Crude oil futures have been in a pretty tight range for several years, making this is an inverted chart. So in real terms, crude oil futures have been making lower highs for years now while holding a key level of support. Now on this inverted chart, it's been making higher lows this whole time. And finally, the bears took control of this and broke crude oil futures down to new multi-year lows. Now, I don't know if crude oil is going to go back to, what was it, negative 40 something dollars back in 2020. I don't know if it's going to get that far. That's kind of a stretch. But I do think the path of least resistance is lower for the crude oil futures. And as you can see on the right-hand side of this chart, I included the volume at price indicator, which just shows the importance of this level right here, this red line. It acted as support for crude oil futures for years, and now that it's broken, there's a lot of bag holders in this. I think the price is probably heading lower for some time. And here we just looked at the futures market. Now, what does the stock market think about energy stocks? I like to look at the RSPG to RSP ratio. So that is energy stocks relative to the S&P 500 in equal weight terms. And here it is. You have a very, very clean top, just like we were looking at here in crude oil futures. There's a very well-defined level of support in this. And yesterday we broke below it here. So this looks like a brand new downtrend to me for energy stocks relative to the S&P 500. And this just confirms my bearish bias for crude oil futures. So I like that a lot. For Gold Rush Premium members, we've outlined several short trade ideas for crude energy stocks. And in particular, the Chevron. I did not bring a chart of Chevron, but I think that's a really clean chart. It's one of the biggest, most liquid energy stocks in the entire world. So there's a very deep liquid options market there. If you're interested in taking a swing at that from the short side, I think that's pretty good risk reward there in the Chevron. Now let's talk about precious metals. We're here to talk about the gold rush. So we better talk about precious metals. And here I brought along a weekly RRG. So this was created by Julius de Kempner to depict relative trends. And it started out for stocks. If you're I don't know, at these big investment banks, you have people that are just focused on technology stocks, or just focused on biotech stocks, or just focused on financial stocks. So I think this started out traditionally just looking at one of those industry groups as the benchmark, and then you scatter all of the stocks inside of that industry group to see which one is a leader, which one's a laggard, which one's weakening, and which one's improving. And it works just as well for commodities, for currencies, for cryptocurrencies, and for stocks. I love these RRGs. And here you can see that not only gold has been a leader this is relative to the Russell 3000, so the broader stock market. So gold has been leading stocks. It's been dramatically outperforming. And here's silver also outperforming stocks, platinum also outperforming, and palladium. So the entire precious metals industry has been outperforming stocks. It's been dramatic. But this is not a new trend. People are catching on. Here's the Barron's magazine cover from this weekend. It says, "Investors are loading up on the metal." They're talking about gold as a safe haven in chaotic times. How long can it last? And here they have a picture of gold bars. They're playing Jenga with gold bars. This is so obnoxious, Barron's. What are you doing here? Come on. So, of course, these magazine covers aren't always a great fade or contrarian indicator. They're also not great at timing things, but man, did Barron's time this well. We've been talking to Gold Rush Premium members about this 261.8 extension from the multi-decade basing pattern that took place from 2011 to March 4th, 2024, when price finally broke out to new all-time highs. And since then, it's been off to the races. It's rallied from about 1900 to 3000 in just a little bit over a year. So it's been a sweet uptrend in the gold futures. But these Fibonacci extension levels tend to be great places to think about taking profits when you first get to them. And then moreover, when we exceed those levels, that's a great time to think about putting on risk and adding to positions. So we've been talking to Gold Rush Premium members about taking profits right here at this 3,300 level in the gold futures. And then sure enough, this weekend we got this magazine cover just to confirm our bias that this trade it's had a sweet uptrend, but maybe it's time for a little breather. And then if you zoom in, here's the daily chart of gold futures. And as you can see, there's a confluence of resistance up here at this 34, right here where we're looking at the 3,300 range, but 33 to 3,400 in the gold futures, I think is going to be pretty significant resistance here for the next several weeks, maybe months, maybe quarters, who knows? I don't think it'll last all that long, but for now, I think we want to look to take profits up here as we run into several big Fibonacci extension levels. And here's why I say I don't think it's going to draw down dramatically or anything. severe like that, because look at how price has corrected at major levels. Here, gold futures were running into a major level of former resistance, but the bears weren't able to take control of it. The price just churned sideways in a pretty textbook continuation pattern. Then you had the same thing happen here at the 161.8 extension level. The price just churned sideways in a bullish continuation pattern. And then you had the same story right here at the 261.8 extension level. Price just churned sideways and then it made a new leg higher. So I want to let price dance right here, potentially looking for a new bullish continuation pattern to form before making a new leg higher towards the 4,000s. I think that's where gold's going, because it has to get to 4,000 before it can get to 8,000 first. And here, let's walk back. Here we have the magazine cover that came out over the weekend. But before that, we found sellers at this big extension level and at this big extension level. As that was taking place, the gold ETF, ticker GLD, saw its biggest outflow since 2016. That's almost a decade, folks. So on that same day, you can see that price made a pretty textbook bearish engulfing candlestick. And what that means is you have an underlying uptrend, and then you have an outside reversal day. So that means price opened above the prior day's range, and then it closed below the prior day's range, engulfing that prior candlestick. That's usually a great warning signal for lower prices, for bears to take control of that short-term trend. And sure enough, that's exactly what happened. Price has continued lower, and right now, as we're speaking, the GLD is trading at 297. It's breaking below all of this support right here, back in the 200s. So I think this just reiterates that we want to let gold dance here. You know, the long-term trend is very much still intact. It's incredibly powerful right now. You know, we were just talking about how gold has gone from about 2,000 to well over $3,000 in just a matter of about a year. That's not something you see in downtrends. That is very, very bullish. But what we haven't seen happen in the precious metal space is participation expansion. We haven't really seen silver catch up to gold. We haven't really seen platinum or palladium participate. You know, we've seen a lot of the gold miners pop off. You know, the relative strength has been off the charts with the gold miners recently. They're raking in money with all of these higher gold prices. You know, new gold, which we've outlined for Gold Rush Premium members, it's ticker NGD. Yesterday, they reported earnings and absolutely crushed it. They had their best earnings reaction ever. And this is a stock that has been around since 2004. So this isn't a new issue or anything. This stock has been around for several cycles, but they are making a ton of money right now, and so are a lot of other gold miners. So the NGD, they beat their earnings estimate by 85%, and they beat their revenue estimate by over 20%. So I think the gold miners continue to be a really interesting place, and we outline all of our favorite trade ideas for Gold Rush Premium members each and every Monday. But in addition to those gold miners, I think it's time for silver to catch up to gold. You know, last week we saw this massive outflow of gold, and the gold ETF GLD was down about 3%. But on that same day, silver futures were up 3%. So investors were rotating out of gold into silver. And I think this is why they're doing it, because they're betting that silver is about to catch up to gold and make new all-time highs. The first step is for gold or for silver, excuse me, to get above 35, which marks this key pivot high right here. And if you fib out this range right here, this handle of a multi-decade, almost 50 years has this cup and handle been carving out. I mean, imagine how price is going to react once it gets above this range. I mean, it's going to be epic. But one step at a time, the 61.8 retracement of this entire range comes in right around 35, which coincides with the pivot highs from the last several months. Above 35, and I think silver's heading to $50 pretty pretty quick. And from 50, the sky's the limit, but we'll cross that road whenever we get there. And I want to finish with platinum futures. We were just looking at a really long-term cup and handle pattern here in silver futures going back to 1980. And here you have platinum futures with another really long-term pattern. And guys, these long-term patterns are so much more powerful than a short-term pattern. Like this has been carving out for like 2 decades now. So if and when price can break above this downtrend line on the platinum futures or get above about 1,000 or 1,100, I think we could be looking at platinum futures catching up to gold. Platinum could potentially double in a very short amount of time, get to $2,000, maybe even $3,000 in the next several years. But look at how this trends, Platinum carved out a very similar consolidation pattern as what it has going on right now. And when price finally broke out of that pattern, look at how it skyrocketed out of that. It rallied almost 500% over the course of 9 years. And I love to look at this Bollinger bandwidth here in the lower pane. As you can see, when volatility is as contracted as it is right now, you tend to get some major expansion, and I think that expansion is going to be the upside. I mean, look at how low this Bollinger bandwidth was before price broke out of this last consolidation. Price was coiled up like a spring, and that's exactly what we're seeing right now. Platinum futures, I think the bulls are about to take control of this one and catch platinum up to gold futures, while gold takes a bit of a breather here. And now that is all I have for you all today. I hope you all enjoyed this. I appreciate everybody being in the chat today. I see you, Chef Aaron, Jason. I appreciate you being here. If you liked what I had to say, do not hesitate to check out what we're doing. We have a link to All Star Charts Gold Rush in the description. And if you are a member of All Star Charts Gold Rush, that means you get all of our trade ideas for the commodities complex. So that's not just gold and silver and crude oil and sugar and cattle. It's also all of these gold miners that have been popping off. And we were talking about shorting energy stocks earlier. There's all kinds of trade ideas that we come up with every single week. We give you levels for energy, metals, and much, much more. Every Friday we publish a chart deck with about 100 charts in it, several scans with potential trade ideas. There's just so much idea generation that we provide with this service. And in addition to the gold and commodity reports, we also issue currency and bond reports each week for members of All Star Charts Gold Rush. In addition to all of this, you can get access to Rangefinder, which tracks all of our trade ideas and gives you real-time data. And I like to look at it for trade ideas that are like close to the entry price. You can also look for trade ideas that are the biggest movers for the day. Yeah, you can filter it all sorts of different ways. Rangefinder is super helpful for organizing all of the ideas we publish for you. And you can get all of this for $12.99 for an annual plan, and we guarantee we'll give you your money back if you don't like what we have to say within 30 days. No questions asked. We'll give you your money back. But yeah, if you are interested in any of this, please do not hesitate to click that link in the description, and we'll be happy to work with you. Everybody, thank you so much for being here. This was a blast. It was a pleasure to talk to Chef Aaron and Jason in the chat. This was a blast, and I hope to do this again next week with you all. We'll talk then.